And hello traders, and welcome to another video. So in last video I told you guys that I had a couple of trades that I remember that were like bringing a lot of percentages, but I didn't took them because we had a retracing impulse or we break the low just barely. I tried to find every trade right now, but I cannot find every trade. But I found this one, and maybe later on I'm gonna find a couple more, and I'm gonna record them. But at the moment I'm recording this video because I found this trade. So basically, we're gonna go through the price action. You're gonna see what I'm talking about and why the double confirmation entry can really help you a lot in, again, that decision making process in your trading. So basically we have seen the standing price action here. Price made change of character, make this impulsive break at the downside, retrace, impulsive break at the downside. As you guys can see, we had a trend change here. We see that the price action is moving to the downside, pretty bearish. Trend is bearish. We had a little bit of retrace, and then we continue to downside, and right from here we start to see this momentum, this crazy lag momentum to the downside, and this beautiful corrective retest to our block. So as you guys can see, we had a retrace here, and as you guys can see, usually when we want to execute this trade, we would execute on this order block here. And right now, as you guys can see, the price shows us clearly that momentum, retrace momentum is there. So we have our high probability, continuation pattern formed. But, and overall price action is really quite nice. Trend is bearish, everything is high probability, overall price action is beautiful, but most recent price action is not that great. Okay, so we have seen a weakness in this week right here, and right after that week we have seen this massive momentum to the downside, aggressive pullback. So when you're looking at this specific price action, and let's say that you were in corrective period and you didn't had a lot of trades, what can happen to you is that you're gonna have FOMO. You're gonna feel FOMO. So sometimes, don't get me wrong, I'm executing aggressive retests, aggressive pullbacks, but I'm quite careful when I'm executing them. Okay, so this is AUDUSD, so we already know continuations are not performing that well on AUDUSD. Okay, so when you see a weakness and aggressive pullback, of course you're gonna ignore this or block. But what can happen is that at that specific moment, your emotions are high and you are starting to feel FOMO. And because of all of the confirmations are quite nice, you are going to execute the trade on this order block. And what is going to happen? You are going against momentum and price is going to tag you out of the position. But when you're looking at pair characteristics of AUDUSD, I always told you that this pair moves like this. It puts a lower low in the market, then we have ascending price action. Then it puts another lower low in the market, and then we have ascending price action. It puts a lower low in the market, and then we had ascending price action. And it is good to trade this pair to catch a reversal here for continuation, reversal here for continuation, reversal here for continuation. So if you see a pullback, you see a break of structure, change of character, and then you want to get involved here in these reversals. So as you guys can see, this was basically it. Okay, it was a beautiful example of how this pair moves, and we want to take advantage of it. So as you guys can see, we have this pullback, lower low, pullback, lower low, pullback, lower low, pullback, lower low. So beautiful trend, beautiful price action. Everything is quite nice in this specific setup, but we have this most recent price action that is ruining the trade. And basically you have high probability order block here that you want to execute on, but you have a retracing momentum. But as you guys can see here, In this momentum, we didn't have any retraces. This was a pullback. And in this momentum, we didn't had any retraces. After that, we also didn't took the low. So this order block here, this double confirmation order block, was high probability to trade and was valid to trade. So perfect example of how this pattern, this new pattern, is gonna help you out again in your decision-making process to not take shitty order blocks, because you already know continuations are not high probability on AUDUSD. You had a week, that's indication of weakness. You had aggressive pullback right after the week, and you already know that those are deadly confirmations. You're gonna get most likely stopped out of the trade. So you could ignore this and you can trade this high probability, fine, good, really perfect order block here. That is really, and the pair characteristics or pair and everything, a standing price action coming to the retest, liquidity building on the way up. Classic, really beautiful high probability entry to take on double confirmation entry. So this is basically just one trade that I remembered that I had here by me documented, and I do not have a couple more. I really remember that this was this year. This was January, end of the January this year. So I do remember, because it was this year, that I had a similar situations 2 or 3 times that brought really more than 60 or even more percent that I didn't took, because we had a retracing momentum or we took the low or something stupid like that. So, but the overall trade was higher probability. So again, guys, that this doesn't mean that we don't have rules. We have rules that we need to follow strictly. Okay, so this momentum needs to be clear. No retraces. Retrace, again, clear momentum, no retraces in it. And then low not taken. This is why I told you you're not gonna find those trades a lot. So basically on a EURUSD, you're gonna have 130 trades in 3 years, and with double confirmation, you're gonna have maybe 30. So you're not gonna find this pattern a lot on your charts. But again, it's gonna help you in your decision-making process. It's gonna help you in refining the strategy a little bit, bringing that risk reward a little bit up on the yearly basis, and really it can be good if executed properly and correctly. I am going to try my best to find other trades that I was talking about, because I do remember them, because they were this year. And if I do that, I'm gonna record a second video explaining those. I think that it was 2 more, this one and 2 more. So this was unlucky. So as you can see, this was really quite beautiful trade, but it took us out barely here and basically left with 30-something% to trade. So yeah, unlucky. It would be really quite beautiful. Would be locked in almost 30%, but yeah, price side took us out here, unfortunately. So basically that's it. Just a quick trade example, the trade that I have that I remember this year that I didn't took and I wanted to take it, and just really explanation how double confirmation entry can help you in certain situations, but that doesn't necessarily mean that you're gonna execute double confirmation or use double confirmation every time. It's gonna help you with those small percentages of times, but again, it's a big plus and a big refinement. So that's basically it for this video, guys. Yeah, see you in the next one.